This conference will now be recorded.
Hello, it's May 8th, about 1 p.m. I wanted to give you a quick update on a couple of things. First, I'll do survey results from what y'all sent in. You can kind of see it on my screen here. About 40% said that they had not received anything or didn't expect to get anything of those that responded, and about 60% had gotten something. The vast majority of those were the $1,200 plus checks. And then for a couple of minutes, I was going to get into a little bit of the technical side with some of this financial jargon. So if that makes your eyes cross, then you can kind of tune out from this point forward. I was really just going to give maybe a word of caution for where we're at, because we've seen some recovery, particularly in the large US companies. But I wanted to kind of show that recent bear markets, and this one doesn't show 2008, but it's kind of the same story. It tends to drop, and then in all three of those other markets, it recovered some, and then it dropped again. What we're trying to do is focus more on companies that have good value, meaning rather than being trendy, they are a good price for what we're paying for them. And so in this case, you can kind of see in this graph the large US companies right here is what they're currently going for. And they measure that by, if I'm going to invest in something, what kind of profit is it earning or expected to earn, that kind of stuff. And so that little diamond is what we're paying for it. This bar right here is what the average is generally. And so we're actually paying above average, mainly because profits are down or expected to be down moving forward, but we're still paying good amounts for those kinds of companies. There's other markets where we're in that are still below average or at least at average, and some of those kind of markets that are a good price compared to the profit that they're producing is where we're trying to put at least some of our new money that's going in, just to take advantage of some of that time. So I was going to show you on this next page, let me delete. Right here, you can kind of see that showing out where you have value versus growth. Those ones, categories of stocks where value, meaning the price that you're paying compared to the earnings, is lower. And we're right into this category here where you've got value being cheap compared to growth stocks. And in these past two areas, as we hit into the recessionary time, which would be right in here, one of two things happened. Either growth started looking a lot more attractive, value started looking a lot more attractive, or growth started coming back to reality. So that's some of what we're doing. And so we're always looking towards long-term strategies rather than short-term. So just wanted to give you a quick update on that, because I know these are accounts you've been working hard to save for, and my accounts as well. And just want to let you know there's what's kind of going on behind the scenes. Of course, we're here, we're trying to keep everything sanitized. We are meeting on a limited basis with clients, but then we also have video chats that we're able to do and phone calls. So need anything, we're available. So may you be healthy and safe and happy and live with purpose and live with ease.